as I looked at the 20 plus trillion dollar commercial real estate market within Mike's Bank, what their underwriters and originators were doing, I just saw a lot of area to bring a machine into to really move the people to the kind of art of their job, right? Where the intellect is needed. And that's generally how I use technology. The first thing I look at is what does the workforce look like today? And how is that workforce going to change over time?
Welcome to the Operate Podcast, where we give you a behind-the-scenes look at company building from the perspective of the builders themselves. This is how we operate.
Welcome to the Operate Podcast. I'm Kerry Ransom. Today's episode is sponsored by BankTech Ventures, the first strategic investment fund designed by the community banking industry for the benefit of community banks and the broader industry. BankTech has over 100 community banks and dozens of exciting companies in its ecosystem who work together to transform and make banking better. If you're a bank looking to invest in your future or a founder who wants to work with community banks, reach out to BankTech Ventures at banktechventures.com. My guest today is one of those exciting ecosystem partners around BankTech Ventures, Shayne Skaff, who is the co-founder and CEO of Blooma. Blooma is an enterprise software company, SaaS company, focused on commercial real estate lending and portfolio management. And I was thinking about the life cycle of commercial real estate. It's a big area for banks, as many of you know, and it's also a very hot topic in our financial press these days. And Shayne and I will talk about that today. He's also a serial entrepreneur with success in a number of other ventures as well. He was the founder and president of a company called MaintenanceNet that he sold successfully to Cisco Systems several years ago. And he's also an investor, advisor, board member to a number of other startups. And Shayne really is what I and others would affectionately refer to as an operator investor. I'm really fortunate, I feel, to be a recent addition to Blooma's cap table as part of BankTech Ventures. Shayne, super excited to have you here. Thanks for joining.
Absolutely. I'm happy to be here, Kerry.
Well, let's start with this hot topic, commercial real estate loans. There's some speculation that we may even see bank failures as a result of some of these portfolios and some of the changing values of commercial real estate and repricing of loans. Why don't you give my audience a little bit of an orientation of what has happened in this industry over the last few years?
Yeah, I mean, I'll tell you from my perspective, and I'll start with just, my disclaimer.
Mm-hmm.
I'm a software nerd. I'm not a CRE banker by
Sure.
trade. So I have certainly absorbed a thing or two while doing Blooma. But yeah, I mean, what happened is, we've had an environment for many years of commercial real estate environment that the interest rates on these loans were pretty low. It's not traditional that valuations of real estate assets, go plummeting overnight. And so, the business model and traditionally, I mean, real estate in general has been a very safe investment for most folks. And that tended to be true until interest rates started to rise, COVID hit, people stopped going to the office. I mean, it was kind of like the perfect storm, right?
Mm-hmm.
So you've got one asset class where people just stopped moving into the office space, and that was impacted massively by COVID. We still had low interest rates during that period. So originations for other asset classes like multifamily and industrial continued to move. I mean, lots
Sure.
of lending happening in 2021 and even in 22. And then as interest rates started to creep, that impacted, virtually every asset class at that point. And then you have bank failures in early 23. All of this, kind of rocked the commercial real estate space, which is the second largest asset class in the world. So you can kind of feel that reverberation throughout the economy. So yeah, there's going to take a long time to work through the system. Certainly, the office spaces and the comeback is going to take, maybe a decade. Again, this is
Sure.
for coming from a layman. But, a lot of these other asset classes will just take, lower interest rates, and valuations have, probably been impacted, but not as significant. And, I think it's just a matter of time, maybe from my perspective, 18 months before we start to see things changing for the better in a lot of those asset classes.
Well, I think that's a great jumping off point. So thank you for sort of setting that It's been very clear that this is an area of primary focus for most community banks. Any other than the fact that it is, as you said, second largest asset class out there, any other observations you've had as to why this is so central to most community banks' loan portfolios?
Yeah, I mean, I think because it is such a powerful asset class and traditionally has been such a stable asset class, really. And as we all know, commercial banks like stability.
Yes.
We sell our software into not just commercial banks, but to debt funds, private lenders, insurance companies. But yeah, from a commercial banking perspective, they like conservative investments and stable investments, and generally, real estate has been just that. And quite frankly, if you're not significantly weighted in the office space, you're doing better than those that are because their asset classes are going to fare a bit better. So
yeah, and it even feels like, I mean, most of the community bankers that I talk to that are not in major urban markets are still feeling generally pretty good about their portfolios, and that they maybe have had a little bit of valuation change, but they're performing. The LTVs aren't too high, or so I think this isn't an existential, all of banking is going to be
well, I also
impaired
think
because of it.
Yeah, I think also at the community bank, they don't have like a portfolio of thousands of deals that they're trying to run through. They generally have an easier time to figure out where their exposure points are. Obviously, that's where Blooma can easily help them as well with our portfolio intelligence product. And so I'd say that the bigger problem is generally in those kind of larger lending institutions that have massive portfolios that they're trying to get their arms around. And where are they exposed as quickly as close to near term as possible, so that they can make certain decisions about how to either move some of that out of their portfolio or just write it off.
Absolutely. Well, and that's a great transition to what I wanted to talk about next, which is, as you looked at this space just broadly, before we talk maybe specifically about Blooma and where you started, like, where are the biggest challenges and inefficiencies that you've observed in the commercial real estate and lending space?
Well, I can tell you, and I'll just kind of step back and tell you how I got into this space. Sure. You had mentioned I'd sold my company back in another AI ML company back in 2015 to Cisco. And after that, I incubated a couple other companies. In January of 2018, a buddy of mine, a guy named Mike Persall, who's the founder and chairman of a bank here in San Diego, him and I started talking about the lack of innovation in and around commercial lending in general. And we just continued to have a few other conversations. I continued to look at the space. I'd say over a period of 6 months, I really kind of focused on what was happening on the real estate side, starting with residential, because I saw and I was familiar with a couple of innovative platforms on the resi side. And when I looked at their customer base that was buying there, those customers also had very large commercial businesses that were largely going unaddressed. And so, Mike and I thought there was a real opportunity to do something there. And so we really incubated this in an incubator that I have here in San Diego. I brought over a few of my engineers from my last company, and we started to build it in the summer of 2018. As I looked at the 20+ trillion dollar commercial real estate market, and I was looking within Mike's bank what their underwriters and originators were doing just to pre-flight these loans and audit their current loan portfolio, I just saw a lot of area to bring a machine into to really move the people to the kind of art of their job, right? Where the intellect is needed. And that's generally how I use technology. The first thing I look at is, what does the workforce look like today? And how is that workforce going to change over time? And what are they going to be willing to do and not willing to do? And sure. So, I'd say in the underwriting space and the banking space, there's a workforce there that is now coming in of millennials and Gen Zs that are less willing to do all of the kind of arduous, kind of brainless tasks, like moving data from one database into an Excel spreadsheet and doing that, multiple times a day. So I just say, we saw a lot of inefficiencies and some area to bring tech in to help with that. And that's really where it all started from.
That's a great observation too on the workforce side. as you've gotten into this, are you seeing that there is resistance from the older sort of, more traditional experienced lender to the younger from an adoption
Yeah.
or willingness standpoint? Just curious.
Yeah, but that's always the case. I
Yeah.
mean, guys
Yeah.
our age, Carrie, and you and I are probably about the same age, are less willing to change
Sure.
things that we've been doing for a while. And so, whether it's here at Blooma or in other companies that
Anyway.
I've started on the kind of enterprise software side, you're always looking at a harder lift on people that have been doing a task for a long time. So you're really going in to help them understand that the technology is not there to replace them, because initially I'd say some of the older generation are always scared of losing their jobs because of
Sure.
what innovation does. They don't necessarily intuitively know that actually innovation's there to make their life better. Intellect is not being replaced here, right? It's really replacing, and actually it's giving them time back to do the things that hopefully they enjoy doing, like looking at the results of an analysis that a machine produces, applying real intellect to that analysis, understanding what the relationship is with the client, and then making a decision, because the machine's not going to make the decision for them. And so, yeah, it's, the training process is geared toward helping these people understand how to make that transition. So, with that being said, you also have to build technology that in some cases runs parallel to their current tasks,
Sure.
right? So that you're not forcing them to leave something they've been doing for 3 decades overnight. For instance, like in Blooma, you can do your full analysis and your pre-flight. You can load up all your deal docs. The machine will go through and do a cash flow analysis. It'll pull back valuations. It'll spread tax returns and K1s and PFS, and all of that data, the resulting data, can be pushed into your Excel model. So the one thing that we knew wouldn't work is if we tried to go and get them away from that Excel model day one, we probably have a mutiny and wouldn't have any users in our system. So that's an area where we still make it comfortable for them. They can use the technology, they can use all of the automation, but they can still see it in a familiar format, which in many cases is an Excel model that they've been using for years.
Yeah, super, super helpful. I mean, just the clarity there, I think, is so useful. It just as another kind of founder insight. So you sort of co-created this. You said you incubated it, but you had a first customer right there. How involved were they? Because as you said, you're not a banker, you're a software guy. So how did you find that right balance with them being the co-creator with you, so that you had the bank credibility to then be able to take it out to others? Because that, I think sometimes people try to come in and tell the industry, whether it's a bank or otherwise, how to do things better and differently, and they, that becomes the stumbling block.
Yeah, we were lucky enough to have a private lender in ABP Capital, which is Mike's private lending organization, and C3 Bank, which is his commercial bank. And really, we used his team over there of underwriters to be our product. They were basically our product team. Those were the people we created. Alexander Lang, which was, I'd say, the first guy, really helped us understand what it looked like to originate a new loan. So he walked us through all of the steps that you go through to originate a new loan, and the same with how they audit their loan portfolio on a regular basis. So we took all of those manual tasks, and then we asked the question, what can we put on the machine, right? How do we help Alexander make faster, smarter decisions through our innovative activity? So yeah, we're super fortunate. I'm somebody that doesn't want to build anything until we understand, one, what is it that we're building? And two, will people buy it if we build it? So even before going into the bank and utilizing his team, because that costs them money, right? To pull people away and help us understand what they're doing. But we talked to, other bankers to understand if we could build this thing that we're thinking about, would they actually buy it? And what would it be worth to them? And so we could understand, how should we articulate the return on the investment? And that is super key and first and foremost, you want to say you don't want to be spending a bunch of time and money building something that essentially there's not really a customer, value or willingness to buy on. And then two, if you're going to build it, you want to build it the right way the first time. And that's really, we were super lucky to be able to do both of those things because of the access that we had through ABP and C3.
Yeah, that's such good insights. And I mean, to your point, very fortunate to have it. I'm curious, as you went through and started mapping these processes out, was it the cumulative improvement in a whole bunch of incremental steps that you could put on the machine that created that value, or were there glaring huge chunks of manual work and costs that you were able to initially point to?
Yeah, I mean, I'd say that there's bigger chunks and pieces of that process, but yeah, in aggregate, it's very large, right?
Mm-hmm.
But I think initially I was surprised by the number of like point solutions that were part of the process of originating these loans, right? You've got third-party databases that you have to go access to pull in information to add to your Excel model. You've got cash flow analysis tools. You've got OCR tools to read documents in some cases. You've got spreading calculators. You've got risk assessment. So there's all of these point solutions that require all of them human interaction.
Mm-hmm.
And so, I thought if we could bring all of those point solutions together in aggregate, we'd be able to provide a very, quick ROI. And we have done that on both the origination side and the portfolio. Like in the first part of origination, our customers could build, credit and risk profiles very easily in our system. So the machine learns them. And then they start uploading documents like a 300-page OM or rent roll unit mix. The machine will parse all of that information. And that happens literally in minutes. In some cases, it takes these lenders weeks to put together those packages, right? And so just being able to get a lender if I'm going to look at 1,000 deals, I want to know the 800 I want nothing to do with as quickly and as inexpensively as possible, right? So just getting them to the point to say, oh yeah, I'm not going to spend any time on that loan. That's as important, more important than getting to the ones that they actually want to take through the underwriting process.
Sure. So when you started more focused on that origination front end, and over the last year or two, you've gotten more heavily into that portfolio monitoring, auditing, and management side. Give us a little bit of history on why you started where you did and how you've ended up being a little bit more in the full life cycle, which was maybe part of your original vision, but just curious how you've evolved there.
Well, I think as in any startup, focus is super important. So originally, when we were looking at the business, we were looking at commercial lending as a whole. We went into CRE because it was not as nuanced as like CNI lending. So we figured, okay, we could put together some structure here and focus on just commercial real estate. And then, at the time, there was lots of lending going on, and it's an easier push to sell on revenue than it is to sell on expense reduction. And so, it was like, okay, if I could show you, if you're looking at 100 deals a month, and I can tell, and you can actually analyze 400 deals a month with the same resources that you have and get to revenue quicker on those deals that you're actually going to take through the underwriting process, wouldn't that be a good thing? And so, we got yeses on that. And so we built the origination product, took it to market in January of 2020. COVID hit. And I thought originations were going to take a huge gash during COVID. So we pivoted and started to build portfolio intelligence. Little did I know that product would be less exciting back then as it is today. As you can imagine, 23 kind of flipped those two products. I'd say before 23, 90% of our deals were being led by origination intelligence. And in 23, that flipped to 90% of our deals being led by portfolio intelligence. For obvious reasons, these lending institutions wanted to understand very quickly where are their exposure points. And they also wanted the ability to stress test that portfolio and look at where those exposure points could be within the loan portfolio that they have. We went really full boat into portfolio, I'd say over the last 18 months. Most of our new product enhancements and releases have been around portfolio intelligence.
That's super helpful. Well, let's talk about, you mentioned the machine, you've talked about intelligence. Let's go a little deeper into this ML and AI portion. Just like where and how are you using that today in the software?
Yeah, I mean, we don't use AI to make decisions for our clients. That would be a big no-no for commercial lending for sure. We're using AI on the front end when we're looking at parsing documents. So we've written AI models to parse these documents. And then our models, we have models that are tracking the user usage of our system. So as users are looking at like lease comparables and sales comparables for subject matter properties, they're actually training the machine on what's important to them for those subject matter properties. So soon the machine becomes smarter and smarter on how to pick lease comparables. For instance, if I'm looking at retail in downtown San Diego, California, I'm going to start to understand what's important for this organization around that specific subject matter property. And then it'll start to bring more of those comparables that are relative to that human interaction. Those are really 2 points where we've actually written models, AI models for. The rest is really around business intelligence, right? So being able to understand, I talked a little bit about the profiling, the credit profiling. The machine can come back and give you a score at the end of the analysis. And that score is the probability that that deal meets one or multiple risk profiles that you set up in the system. That's not AI, that's math, right? There's, I'd say, lots of marketing buzz around AI and machine learning.
Yes.
And so we try and be very clear with our clients exactly what we're doing and where those things come into play. And also because AI and ML, especially in the commercial banking space, it makes people very nervous. And so we have to be very clear about exactly where we're using it.
Yeah, absolutely. Well, and that was the follow-up, and I think is explain maybe a little bit more. You mentioned earlier, you're not doing AI-driven decisioning as an example. You have AI in your name, and I think even in that case, regulators looking at a vendor list for a bank could draw attention and go, tell us about this. So to your point, just even giving them the explainability is huge. But explain, I guess, a little bit to my audience, some of whom are going to be a little more or less knowledgeable about this. Like, why are regulators so skittish right now on this topic? Yeah.
In AI, you can't go show exactly why the result of something is that result, right? And with business intelligence, I can tell you why it is that way, right? Like when you're using math, like I can actually show you why is that score an 85? Well, it's because you said that these things were important and you put this weighting on those 3 things. And that weighting comes out, this is the math that it comes out across. It's an 85% match against the attributes that you brought in. You can't do that. The explainability isn't there with AI, right? And so that's why, there's, so much excitement around using AI, and we have integrated a form of, chat GPT so that you can use it to like write narratives out of our system. That's a very easy one, right? It's as long as you're not sharing, customer data out in the cloud, you can still use generative AI to write narratives for you, and that's there's no risk level there of any thing. But most people in regulated spaces are nervous about AI because of the explainability. You can't explain the actual result of what you're getting.
Yeah. I look forward to the day where we have AIs analyzing the output of other AIs to try to explain it, right? So that's probably the eventuality we're going to get to.
Well, yeah, the only way you can do it is you get somebody, you can show them your model, and then they have to be technical enough to understand that, like how to read that model, and then why the result of all of this data. And the other thing is, if you really want to understand, you have to understand hundreds of thousands of pieces of data that come in to train the model. Like when I talk about training a system to read documents, it takes us hundreds of thousands of documents to train the AI model, right? So to say, okay, explain to me, why this thing got parsed like that, it would be impossible. Well, it would be possible. It would be crazy to try and walk somebody through hundreds of thousands of documents and how that machine, grabbed that specific item and brought it there. So anyway, it's not something that you're going to see people doing, which is why in regulated industries, you're not going to see a lot of AI in ultimate decision making. You'll see it in behavior mapping, but not in decision making.
Yeah, super helpful. And I think, we could go deep into even distinguishing some between that. Last question on this. How are you finding banks have been as far as the data that they have, the quality of the data? Like, are you finding that in many cases you have to come help them clean, organize, and upgrade their overall data capability around things like portfolio management and monitoring to just help them even get the value out of what you're providing?
Yeah. Well, so the nice thing on the origination side, it's super easy product.
Yes.
Clients up and going in 5 days. On the portfolio side, I would say it runs literally the gamut.
Sure.
You've got some people with all of the data pieces in a single system, and we can connect via API to that system, and we're pulling data. And then you have the other end where multiple systems have different pieces of this data that's not coming together in any one place. And we have to basically pull from those systems, map it together, and bring it into our system. And so that's great. But when things change in their system, so in many cases, we're helping some of these banks get to a place where they can bring this together into a single system so that going forward, it's not so difficult. The hardest thing is that first time we pull in a portfolio, because after that, you can upload like updated rent rolls into Blooma. We can keep a lot of that data updated in our system.
Sure.
But what happens when you want to take this back into your banking core, right? So essentially, you want to have a system within the bank that can accept information back into it. And that's a challenge for sure. And I'd say for a lot of the smaller regional banks, maybe, because the smaller banks, in many cases, a lot of this goes right into an Excel spreadsheet, right? That's where they're managing their portfolio.
Sure.
And so with some of the regional banks, they have a lot of these disparate systems, and even some of the bigger regional banks. So it is a challenge. I'd say some cases it's super easy, and in some cases it's as hard as it could be.
Yeah. No, I appreciate the candor. Well, Shayne, I mentioned this earlier, this isn't your first startup, but having done a whole bunch myself, I feel like each one has its own unique set of opportunities and challenges. So what do you find has been the biggest surprise of this one versus MaintenanceNet or others that you've been involved with?
I'd say that the hardest part of this is the sales cycle. I'd say on the best of days, commercial banks are very difficult to sell into because all of the regulations and the risk profiling and that sort of thing. I'd say in most cases, the business wants us, and then you still have to go through vendor onboarding and legal, which can take, in some cases, a year. So you can agree on the deal, and then it takes a year just to get the deal done. And so that is a very difficult thing. I'd say less of a struggle in the smaller banks than it is with the large regional and national, in some cases global banks, but still a struggle. And I think that does need to change. I think that innovation happens so quickly. And if this industry wants to keep up, they're going to have to figure out how to move things more fluidly internally. Otherwise, they're going to constantly be left behind. And being left behind can be super dangerous for commercial banks. I'm not selling security software, but I would imagine it's not very dissimilar if I'm selling security software into these banks. These banks need to have the most innovative technology in their institutions, or they're going to be vulnerable. And I'm not talking about vulnerability just from a security perspective, but vulnerable to just what lack of innovation means to them. The expenses are going to be higher than they need to be. They're not going to be able to transact as quickly as they could. And so, my hope is that And I'm starting to see a bit more of this. You see a lot of these institutions have innovation hubs within the banks. And I think hopefully those innovation hubs get to a place where they're helping that bank to understand the importance and to put a process to move these innovative companies like Blooma through in a different way so that they can actually establish the value of what these technology companies can bring to them, and do that quicker than it's happening in the last, well, I'd say 2 decades.
Yeah, such a useful perspective. I think, the things that I've observed are very similar to you as someone new, deep in now the banking world. And, some of it I think is the fact they were able to have a pretty similar tech stack for decades without really having to think too much about it. And it just bred that comfort or something. And then I think some of it's the lack of capability and confidence in having evaluated, bought, and implemented, or the fact that they've gotten burned in the past as sort of a hangover effect.
Yeah.
There's a lot of things there, but we're trying to work very closely with a lot of our banks around building or rebuilding that capability so that they can be much more confident buyers. Because to your point, it can't be one project a year or one decision a year. I mean, it needs to be a much higher velocity of adoption and change, because this is only speeding up. It's not going to slow down.
Well, I think it's also important with what you guys are doing at Bank Tech Ventures. I mean, because having a fund like yours really helps highlight those challenges and is honest about where we're at and where we all need to be, right? So I think it's an important endeavor that you guys are working on. So one of the reasons I'm glad to have you guys on board.
Absolutely. Well, we're super excited. What in this particular journey so far, what are you most proud of you and your team at this stage?
I mean, look, I am always proud of making through the struggle. I took my first company through the struggle of 08 and that whole debacle, which was unbelievably hard.
Yes.
I mean, we're taking a SaaS platform that primarily sells to commercial lenders in commercial real estate lending. It's like the trifecta of difficult things, right? With pandemic, interest rates, bank closures, it has been one headwind after another. It's been as challenging of an environment as I've ever been in as a 50-year-old professional. And we've got an amazing team. They've all been in it. And I'm most proud of just getting through difficult times with the team that I have and providing what I know for a fact is the best solution out there.
Sure.
And even the vision that we have, which we haven't talked about here, what we're going to do on top of what we've already built is going to be game changing for commercial real estate. And I'm so excited about that. The benefit of these difficult times is there's lots of death and destruction of competitors around me, which certainly bummer on their front, but it obviously frees us up to take an even more of a lead position on the upswing. And so that upswing is coming. We're for sure going to benefit from it. And we've been doing quite well, even with all of the headwinds. We continue to bring on new clients and grow our user base. So I'm super excited about what the future holds here.
I love the entrepreneurial optimism, my friend. That is part of why we do what we do, right?
If we actually knew how hard things would get, we'd never do anything. And
that's right. That's right.
The wonderful thing is I have the amazing ability to forget pain.
Yes. Well, it's like, I always say, we both have multiple kids, and I think that's always a good sign that, we get through it. We go, I'll do that again. Yeah.
Well, that has more to do with our wives than us.
That's true. That's very true. Very true. So I will ask the question though, if you knew now what you knew, would you start Blooma again?
Yeah. I mean, I'm not like, I would. I mean, like I said, people always ask me, are we gonna take this public one day? Or we're gonna sell the company? And then if you did, and
Yep.
you were not at Blooma, would you do something again? And, my answer is always the same, like, probably, even though
Sure.
inside I was like, oh my God, I got to have a break. But yeah, I mean, look, I like going into spaces that are difficult. I mean, maintenance did the same thing. I mean, I was a younger man when I started that at 29, but it was a very difficult space, not a lot of players in it. And there is, for me, after the struggle and like the success of actually building and innovating and disrupting a space that has operated the same way for decades and decades, that's just where my purpose lies. I just love getting through that and delivering to that customer base something that changes kind of the workforce and how they do what they do. And so I think this is a space that is as dramatic as they get, and as I'd say historically has not accepted enough innovation. So yeah, and long answer is yes, I would do it again.
Yeah, but I so appreciate the clarity and context around that, Shayne. I think that's so useful for others that are contemplating, should they go build something, why? So just knowing your purpose like that, I think is so great.
Well,
So
I think it's also our gray hair, Carrie. One thing that we've learned is that nothing is ever easy.
That's right.
No matter, I mean, you think it's going to be easy, and it never ever is. It's always 10 times more difficult and more stressful. But on the other side of that is, exhilaration. And, I think there's a lot of startups that fail, not because they're not going to make it, but because they just don't have the team in place that has the stomach to get through it.
To keep going. That's right.
To keep going. So
that's right. Oh, so good. Well, you talked just a little bit about it. What of that vision for your future of Blooma can you share at this point?
Yeah, I mean, look, when we went out to build Blooma, it was really about getting lender supply coming through the platform, and so we've got that going. We've got large national lenders, we've got regional lenders, we've got community banks, we've got debt funds now, a couple insurance companies. And the ultimate goal would be to allow borrowers for kind of the long tail of lending. So, if you figure that, out of the 20 plus trillion, 20% of those dollars come from 80% of the volume, right? So they're smaller deals. And, ultimately we want to allow our current lenders to interact with their borrowers through the platform so that the borrowers can, take in their financials and bring them without, sending it to the underwriters. So make that more seamless. And then allow borrowers with deals that, they don't have a lender on to bring them into the Blooma marketplace and get connected to a lender, because all of our lenders are building lending profiles so we can make that connection super seamlessly. And then even more significantly, allow our lenders to syndicate and trade within that Blooma marketplace, because we know that that's a lot of what they're doing today, and making that seamless for them to do. And also for us, it's a great go-to-market, because I can have lenders come in and they have their syndicate partners, and those syndicate partners will need to come into Blooma, and that's ultimately kind of where we're going with the big vision, and that's really the big business that we set out to build.
Yeah, and that it makes sense. And again, being able to create some of the standards and normalized data that requires to actually be done, which is hard to start on its face, but you've put a lot of the pieces together. So that's a great vision, and excited to obviously join and support that in any and all ways that we can. So final few minutes, would love to just talk a little bit. I'd so appreciate how open you are about yourself, but let's talk a little bit more about you. You've been doing this for a while, as you've talked about, but any area of your own capability that you're kind of investing in right now, as you're one of those that I know is always thinking about how to keep getting better at things.
I mean, yeah, for me, it has more to do with continuing to open up my perspective about literally everything. And so I'm like constantly doing that. In fact, I had the conversation last week with somebody that I'm mentoring, and they asked me who my mentors are, and my mentors change all the time. And even at 50, I'm looking for people that are doing something that I want to do, that I'll go out and learn from. And that's not just in business. I'd say, I have equal amount of education to do on the personal side, and certainly hobbies. And so I have mentors across all aspects of my life, but opening up that, perspective of what, can be done is super important. I mean, I think that's really it, because, yeah, I'm learning a lot about commercial real estate for sure, but I don't necessarily have the full perspective of what I could be doing in this space, right? And that has less to do with learning about the tactical things within commercial real estate, more to do about learning about how to open up all the possibilities about how to approach those tactical things.
Sure.
And so, yeah, for me, it's all about looking for people that can help me open up my perspective. And I'm doing that, really every time I see a company that's doing something I think is interesting and that's bold and something that is audacious. I want to go and talk to that founder or CEO and ask them, well, how do they do that? Or how do they think about the world? So yeah, that's kind of how I look at like continuing to educate myself.
That's awesome. I think I know the answer. How enriching do you find mentoring others?
Yeah, I mean, I love it. It's funny, as a young person, I would say this is one thing that I wish I had done more of as a young man going into my kind of professional part of my life. I just didn't want to bother people, right?
Mhm.
And now I tell people, like, mostly you can get a hold of really anybody.
That's right.
And if they're good people, they'll want to help you. If you make a good enough case, you can get help from just about anybody. I found that to be the case. I've called on people that you would know, that anybody that's watching this would know, to just have a conversation and been able to do it. I'm no different. If somebody from, I graduated University of San Diego, if one of the undergrads calls me or reaches out because they want to get into tech or what have you, I generally accept the meeting and or coffee and we'll sit down with them. So yeah, I like giving back. I mean, I've been fortunate enough to have the opportunity to have great mentors, and I think it's up to us to turn that back around.
Pay it forward. Absolutely. Well, I've also found there have been many cases where I've gotten a ton out of my own learning by just getting the feedback and perspective from somebody younger and how they're thinking about the world and where it's headed. And like, that's its own
100%.
sort of almost reverse mentoring, which I find super fascinating too.
I didn't mention age when I talked about my mentor. I actually have a couple of younger folks than myself that have mentored me in certain aspects. So yeah, I totally agree with that.
And sometimes they don't even know it, right? Like there definitely are cases where,
no,
they don't.
My
even
16-year-old daughter has been a great mentor.
That's right. That's right.
She teaches me a lot about communication.
Yes, absolutely. Well, one thing, let's just, the last couple of minutes, what do you think the most common mistake you see early founders making?
Not enough due diligence before they go out to build. I mean, I deal mostly with technical founders that just want to start building.
Yeah, builders love to build. That's right.
They love to build. So I'd say not enough diligence on the productization and commercialization, which really doesn't cost any money to do, is one thing. And then, not knowing the numbers, not spending time with the numbers, and kind of mismanaging the cash. I mean, and that's like the most important thing, especially once you initially get funding. So I'd say those are the two areas where I see most people getting it wrong. And I'd say mostly like 90%.
Yeah. Oh, that's so valuable to share. So thank you, Shayne. So final question, what are you most excited about in the next year?
I'm most excited. I mean, so for me, my primary focus in life is my family. So I've got one kid graduating high school. I've got another kid in an exchange program in Sweden. I've got a first grader. So I've got the whole gamut. Honestly, I just am excited about seeing the progression of my children and as well as my wife, as we've been together for 24 years, and the growth of the family excites me the most. On the business side, definitely excited about the trajectory of Blooma. We've got an amazing Q1. Right now, we're having the biggest Q1 we've ever had.
Awesome.
So I'm super excited about the energy that this year is starting on, So let's keep it going. No more headwinds. We're looking for tailwinds, lower interest rates. I'm super excited about.
Awesome. Well, your priorities are right. So that is a great way to wrap this conversation. So fun, as I knew it would be, and our conversations always are. And I just want to say thanks for letting us be your partner on this adventure. And I'm super excited of the positive impact I think we can have together. So thanks, Shayne.
Thank you, Kerry. Appreciate it.
Thank you for listening to this week's episode of Operate Podcast. If you like this conversation, as a favor to me, you can rate us, review us, or subscribe, or tell your friends. You can also reach out to us on Twitter at Operate Podcast. Until next week, get out there and operate.